over outcome on the screen here. And it is not tweaking and flashing a lot. Yeah, I think you might be mistaken, Vicky. I don't remember exactly what we were talking about on that, but it wouldn't be for pit power plays. Maybe starting. Oh, I think maybe I mentioned starting a little bit earlier with the calls and then maybe potentially trading the close a bit, which could be something that we do in the near future. Any questions though from anybody? Drop them now and I'll get to them. If not, I can do them at the end too. Something comes up. Everybody going crazy in the chat asking a bunch of questions. Don't show up for the call. That's okay. I'll love y'all anyways. All right, we'll just get started. This is just a very important lesson. I'm seeing a lot of fresh faces in the room, which is great to see. But one thing that drives me crazy, and apparently I just need to do a better job of preempting this. And I made a new welcome video that kind of goes into this, but people will join. It's their first weekend. Take a trade on Monday. Trades down 5% by Tuesday, and everybody who joined, and that's the first trade that they took, is anxiously quitting and done, down 5%. So there's definitely a mindset gap there. Um, and maybe there's just a lot of trial jumpers that see a short-term trial and jump on that and aren't serious about learning or serious about trading or anything. That's possible. But just in case there's a mix, I want to make sure we're setting the right expectations and teaching you guys how to be real traders, teaching you guys how to be successful, not just shooting out trades and wishing for the best and hoping you understand. So, with that, I came up with a brief presentation here. Let me turn my squawk off. I don't got no earnings tonight I care about. It's going to distract me. All right. Brief presentation here, real quick. So, process over outcome. Setting the expectations. You got to expect losses. You got to manage your risk, and you got to trust the data. So, you can follow a good process and still lose, but it's a winning process over time. So, you're essentially losing the battle to win the war. And you can also follow a bad process and win a whole bunch. We had a lot of people experience that in 2020, 2021 when we were first starting these alerts, and they wouldn't follow any process. They'd just go all in on a trade and make a bunch of money, and it would positively reinforce bad behavior, which is the exact opposite of what we want. So even though it may hurt our bottom line, I don't really care about a bottom line in this business much. I care about my trading bottom line a lot, but not so much recurring revenue from subscriptions or anything like that. Um, my bigger concern than people quitting when they first see a little bit of red is them not learning the process and them thinking that's how the process goes. So many people here have been in so many shitty alerts, I'm sure, because I tried like 50 of them doing market research and all 50 sucked. So I'm pretty sure that's kind of the feeling people are getting when they're coming in. And personally, I would rather you lose a couple trades in the beginning so you don't get overconfident. We've had a lot of people get overconfident because we were winning so many in a row. They get overconfident, and they go all in and then they lose too much. So, process over outcome, focus on the process. If you perfect the process, you will have a very profitable tool for the rest of your life. If you have a good outcome for a trade, you might make a couple bucks that you're probably going to blow pretty soon because you don't have a good process. So there are good trades that lose and there are bad trades that win, essentially. So trader A, you may have followed the setup. You may have had proper entry. You may have managed your risk. You may have respected invalidation, had a good trade plan, followed the plan, controlled what you can, and a true social post comes out. saying that we're going to nuke Iran, and next thing you know, you're in a bloodbath and you lost that trade. Trader B, he could be chasing a move, could be way oversized, ignoring risk, get lucky, and news comes out that we're signing an agreement with Iran to be best friends and have all of their oil sent directly to the pockets of American citizens. And boom, you're lucky. The freaking stocks are ripping, and you just got lucky. So don't grade the trade by the result, grade the decision by the process here. So one trade is noise, a series of trades reveals the edge. So if you look at our track record, if you look at our win record, if you go through any of our rooms, if you're new to a room, you can just scroll up and just keep scrolling. You can see every trade we put in with timestamps and all that. Because if you just came in and you happen to take a losing trade, that is noise. That is not a big deal. But if you see that the last 10 trades were winners, you can say, okay, that's a 90% win rate, higher, right? So you don't need to win every trade. You need an edge to win over time. And we have proven time and time again that we have that edge. So professional traders think in probabilities, amateur traders think in outcomes. Our goal is to teach you how to be professional traders, or at least teach you how to make some money like you are professional traders. We are not here to teach you to think in outcomes. That is for certain. So red doesn't always mean wrong. So this is kind of my next point. So a lot of people act like we're in a losing trade when we haven't even lost. So red does not always equal wrong. So if you're in 0 DTE, you notice that we added new entries, new sniper entries. They actually didn't fire today because the setup wasn't there. But this also applies to pit power plays as well. So you'll notice here, trend is established. And then here, when it gets too far from the EMAs, you're overextended. So overextended overall uptrend. And maybe we enter on a pullback here for pit power plays or for 0 DTE, or we probably enter here, but then it keeps pulling back here. And this is where everybody's having panic attacks and thinks, oh, I just signed up for another alert service. It's going to sell me some trash and has no idea what they're talking about. But in reality, hopefully you watch the videos and jump on the calls because we're going to tell you this is expected. We're entering a trade and uptrend. Cool. It pulls back to the ADMA. Oftentimes it pulls back to the ADMA and bounces and rips higher. So we want to enter here. But if it pops up a little bit and then pulls back to the 20 EMA, we're fine with that too. I actually did use this as the 80 EMA example, but you get the point. AI made this picture, so it's not perfect. So don't ask, is it red? Ask, is the thesis still intact? You'll hear me say the word thesis a lot. If the thesis doesn't change, I am not cutting a trade. I do not cut trades for any ambiguous number, percentage, anything like that. Stop loss is all junk. So don't chase the price. Let the price come to you. That's where those pullback entries, especially with the 0 DTE, especially I added those now, especially because we're getting really choppy. The whole market's real choppy. So you want to try and snipe your entries a little bit better. You want to avoid FOMO. We've been stuck in a range for months at this point, and the range was moving a lot more. There's a larger true range a few weeks ago, and it's been consolidating, which means a big move's coming. We're about to make a bunch of money, but who knows when, right? So the chase entry, you may have been rewarded for chasing here at one point in time, or maybe even chased here. And that's the FOMO entry, really. So if price is extended from support, no risk reward, not a good risk reward anyways, high stress is emotional roller coaster, and a small pullback feels like a loss. Whereas the pullback entry, this is especially true in 0 DTE. If you ever see anybody having a panic attack about 0 DTE, it's usually because they entered here when the first alert came out. So now in 0 DTE, we have an alert that comes out just to tell you the best trade of the day. And then when it pulls back to the ADMA, it gives you a sniper entry alert, sometimes, if it ever pulls back there, within like an hour and a half of the alert coming out. And then if it pulls back to the 20 EMA, it'll give you another alert. And then there's another one where it breaks the opening range too. So those are the three entries that I would take on any 0 DTE usually. Once we find the best stock to trade, the best zero DTE option to trade, then we're just looking for the entry. And then this is where we're taking it on the pullback here. So even if you entered up here, by here, you're good, right? But if you enter with one contract here and then you buy two more here and then you buy three more here because it's confirmed, you're even better here as opposed to buying all five right here. So better odds for better entry, location over emotion. Like I said, red doesn't always mean sell. You see guys in the chat, oh, it looks like it's bearish. No, it's not bearish. It's pulling back. Way different. And this brings up why I don't use stop losses. So stop losses are really meant for stocks and futures. Options are your stop loss. So if I was trading the SPY and I'm in at 700 and I set a stop loss at 690 and I trade 1,000 shares, then my highest loss is $10,000. Well, if I was doing that with options, I would just buy $10,000 worth of options, and then it's the same thing. My highest loss is still $10,000. There's no point in setting the stop loss. Stop losses are meant for defining risk. Options are meant for defining risk. So when you put a stop loss on an option, you're just double defining risk. If that's what you want to do, cool. But how I would preferably do that is with a spread. So like, let's just say it's a $10 option. I think I have to over here, $10 option. So that's $1,000. And let's say you put your stop at $5, which is $500. I don't love that setup. What I'd rather do is buy it the $10 option and then sell a $5 option that's farther out of the money and still have $5 of risk that way. So I'd rather limit my risk. If I'm using options, I'm going to limit my risk with spreads, not limit my risk with a stop loss. And then last but not least, size, position, your sizing of your positions is probably the most important thing in any of our services. You'll notice in zero DTE this week, the last 2 days when I'm entering small. I'm entering small. It's choppy. This price action is absolute garbage. No reason for me to go big size this week at all. And this is just kind of a breakdown of the different things that happen here. So trader A with $1,000 account, position size $100. Account impact is minimal. These are actually all the same, but this would be trader C. It would be the negative one that you definitely don't want to do. That's if you have a position size that's like half of your account. That's kind of crazy. So don't do that. Same size every play is cool. It's good to have multiple entries as well. So thinking a max size per play usually. But if you're newer, like I've been saying in the chat, it's good to not overcomplicate it as well. And so this is our mindset. So long-term consistency is what we're all about. We're not about quick wins. We like quick wins, don't get me wrong, but it's not about fast money. It's not about making back what I lost yesterday. It's about building a process that works. We've proven the process. We've proven it by documenting it for 6 years now. 10 years of experience, 6 years of documentation. We know what we're doing. The process is proven. We don't chase. We look for the right entries. We buy at good locations. We size so that we can afford to take losses and we're not sweating them out. And we judge our results over 100 trades, not one trade. So I would say, don't judge me on one trade. Judge me on 100 trades. If you judge me on one trade, you might like me, you might hate me. I have no idea. But if you judge me on 100 trades, I'm pretty sure that you're going to like me. So that's all I got for you today, guys. I just figured we need a quick risk management overview, but happy to open it up for questions here if anybody has. You can also drop them in the chat if you don't have a mic or if you're shy.
Hey, Evan, I have a question. This is Jill. I watched the videos and I saw that you have some trading view indicators. Are you still giving those to your students?
Yes, you are welcome. I have an abundance. I've just been building them for myself, but you're welcome to get whatever you like of them.
So how do I do that? Can I request it through the platform or do I send you my
Yeah,
visa?
I think it's in Vision. I think Vision, there's a request.
Okay.
place. Like I know in zero DTE it's envision zero DTE, but just so you know what you're getting at. So first of all, there's no perfect indicator that I recommend. Just like when it says buy here, it doesn't mean buy. Okay. No, it says buy. It doesn't mean buy. But if we had just alerted go long SPY, we're getting in options contracts here, looking for an entry, and you're looking at the chart, and then you see the buy. Okay, then buy. So it's more of just help with entry. It's not necessarily um, end all be all or anything like that. And the little lines I do like, so I built both of these, but this one is really just for quick entries and scalps. It's just when it breaks the candle before, or you could set it up however many you want. So you could set it for when it breaks below the last 10 candles, 5 candles, all that's customizable. But it'll give you arrow when it breaks below, and then a stop loss above the candle before. That's a good place to set your stop loss. I really like that one if you're scalping or day trading zero DTE very fast. But I have an absurd amount of indicators you guys can get access to as much as you want, pretty much.
Wow, okay.
My problem is I made too many and then I don't know what happened. I'm like, which one is this?
Yeah, that's a lot. I don't know if I want all those.
No, you definitely do not want all of these, but let's see. There's a
I
one on here that I use all the time that everybody should get. It might be that one. It's the one. Oh, it's true. So this right here, going over market internals, especially if you day trade, that's where this one would be important. The VOLD is volume of increase or volume of buying versus volume of selling. Essentially, it's probably the most important market internal there is. Tick is at that split second there. How many stocks are hitting the buy, how many are hitting the sell, and ADD are how many are advancing versus how many are declining. So if you're trading broad markets, SPY, SPX, QQQ, this table is absolutely clutch.
Okay. And so what's that called? The
Uh,
pit table V3?
yeah, I might have to even steal my source code.
Okay, whatever. Give me way more credit than I'm smart. I'm not that smart. Okay, so now if I go click it, then it'll ask you if I can have a copy.
Well, once I publish it.
Okay.
I'll get to that after the call.
Okay. Thank you.
Yeah, no problem. All right. Yeah, Nathan, they're probably waiting for CPI to get this market moving, I would imagine. Love the journaling, Vicky. We're looking at a 5 minute right here. Any other questions, guys? We got 16 people in here. A couple people just showed up. So if you got any questions, drop them in. You missed most of the meat. The clean air entry is the little arrow I was telling you about. It's mostly so it works on any time frame if you think about it. So here's a good principle to learn, I guess. Um, Whenever you're trading, if you want to know if it's a good time to enter, look left. is a good rule to always have in your mind. Always look left. And for me personally, if I look left and I see, so like take this baby right here. Now, if I was going to enter here and I look left, I see, okay, price is still in the same range as the candle before, and the candle before that, and the candle before that. I'm probably not even going to think about entering because it's just prices in consolidation. It's not in distribution, it's in accumulation. I like to enter on a distribution leg. So notice when this candle here broke the low of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 candles. 16 candles. Is that a movie? Um, Once it broke the low there, it had a nice drawdown where you could have made some quick bucks. But until that point, it was just chopping in the zone. So it helps you recognize you're leaving a chop zone. And the time range that I would use it on would be different depending on what time range I'm trading. So if I'm trading day trading, scalping, 5 minute, 1 minute, but if I was looking for swings, I might go 4 hours. So you can see where it breaks the 4 hour price range, or it could even go out to a day or a week. That'd be more for swings there. But also that little line it gives you then too is a stop loss. So nice to set your stop loss if it comes back into consolidation or if it breaks the other side of consolidation. It's probably a good time to get out. Any other questions, guys? I wish everybody that was blowing me up in the chat all day was in here.
I think in the chat, a lot of the questions come from get a signal and then you wait till you get the sniper signal. This is in the 0 days DTE. Then
Yeah,
the and then it changes a little bit. Like you'll come back and say, "Oh, it's not as strong as I thought," which is good because you're keeping us in the loop. But I think that's
sure.
where a lot of that chatter comes from is just people trying to figure out. I know that I'm like on the go a lot, and I'm just when I get a alert, I'll just go over to my Robinhood account and dial it in, and I don't analyze it because I'm on the road, and then
Sure.
I'm not, of course, I'm not as profitable as other people because I'm not really analyzing it myself. I'm just doing it, just following you blindly.
Sure. Um, and yeah, that's where little things like the score comes in and having your position size based on the scanner score. So all the scores this week have been trash scores. So Thursday, Friday, Monday, Tuesday have all had very low scoring plays, I believe. So we haven't gotten that much meat out of them. We've either stopped out like two of them or just went to zero on two of them and then small profits on two of them and then pretty good profit today on the afternoon one actually. And believe it or not, the morning one actually ended up playing out. So the way that you're doing it, Chill, the risky bisky way that you're doing it, where you're just buying and then going about your day and kind of checking in here or there when you can. Um, According to the data, it's not going to kill you. Um, I don't think I have enough data to be super confident about that, but if you would have just bought and just waited, you'd be fine in most of these trades. A lot of them close green. Um, but yeah,
Yeah,
definitely
I
smart to pay
panic.
attention.
I do panic when I open it up, and there's Robinhood sends me messages and says, "We're gonna close your positions down." And then like that one, I can't remember what it was that last Friday or Thursday? And so I get scared and I jump ship early because I don't want to lose my whole premium that I put on the trade, but maybe that's where I'm going wrong. So I'm
I was
just
going to say
chickening
that
out.
that tells me that you're probably putting too much size on.
Well, no, I have enough money to do it. I just don't like losing.
That's fair. Losing gets easier after a bunch of wins, so just get used to winning first. But I would try to avoid holding them to the close. What you could do, are you, and Robinhood's trash. I don't know. Actually, is Robinhood any better these days about like setting stop losses and like trailing
No,
stops?
no, I can't do
No,
that on there. I just had an old account there, so I was kind of using it as my
sure.
play account to do this for a while. And then if I, for like the power plays, I go into my Schwab and do like a real account and I look at it and I pay attention. But the on the fly zero DTE is where I'm really getting hung up.
Yeah, I would probably flip those concepts. The pit power plays is where I'd be okay on the fly, just let it go and come back to it whenever. I'd barely even look at those trades.
Okay.
The zero DT is where you kind of got to lock in and focus. But it's okay to take two zero DT trades a week when you can focus instead of taking 10 zero DT trades a week. Some when you can, some when you can't, get mixed results, all that.
Well, I noticed, I think I saw you say that you were tightening up the screening, and I would rather have, I would rather not force a morning and afternoon trade. Like if there's a way to say, okay, we're only gonna give you, or we're gonna indicate the top signals of the week. Like this one's better than anyone I've seen in a long time, or whatever, because then we could be a little more selective. Because right now I feel like I have to trade whatever you put out in the morning and in the afternoon, which I know is not correct, but that's what I'm kind of feeling like the pressure to.
Definitely don't do that. So I don't even take all these trades. You know what I'm saying? I'll tell you when I'm not, but a lot of these I'll see come through. I'll be like, meh. Like, so this one I did take. I took both these today, so not a good example. Not a good example. But let's just use an example. So let's say I see this trade and if I just don't love the trade, I'm just simply not going to take it. If this scanner score, I think is the only good one we got in the past few days. So, um, but this initial entry, this initial setup, this isn't even an entry. This is your setup idea, basically. It's like saying, I would not take this trade ever unless you were looking at it and comfortable trading it on your own. I would wait until the sniper entry, which in this case it was actually a little bit more expensive than the other one, but this is at least confirming that it's in a good place to enter.
Okay.
And then you have your exits right here. You could just, if I was going to be on the go, like let's say you watch it for a minute and it's trading sideways, and you're like, man, I don't want to exit the position because it still looks good, but I got to go grocery shopping. I would just put in an exit at the initial take profit at 50%. Ideally, you could trail more contracts than that. But like I said, with Robinhood, it doesn't really have that option, I guess. Maybe if you did it on a desktop, it might. Webull might. IBKR definitely does, but it's a nightmare to deal with.
That's what I feel about Thinkorswim. I could do it on Thinkorswim, but there's so much on that platform. I can't, it's not easy. Like
Yeah, have you
Robinhood,
messed
like,
with the mobile of it?
yeah, but I haven't really dug into it as much as I probably should. Do you like that? Do you trade on that?
Yeah, I use the mobile when I'm on the go for sure on Thinkorswim. So check it out. It's pretty cool. It's
Okay.
much more user friendly than the desktop, or at least simple.
Okay.
But I have to jet, guys. I appreciate you guys jumping on. Any more questions? Drop them in the chat, I guess, or like the regular chat. But now is your time to shine. But that's okay. I'll send this recording out, and I appreciate you guys jumping on.
Thanks.
Thank you.
Peace.
Thanks, boss.